So one of the things that relates to this is the late filed return. And the penalty is based usually, or for the most part, on whether you owe money.
That's correct.
And so if you owe and you don't file that tax return, it's like 5% a month.
Right.
Based on the amount that you owe. So it's important to get those taxes paid on time.
That's correct.
Yeah, if you can. All right. What are alternatives to full payment of the tax?
Well, there's installment payments that can be negotiated with the service, and then there's the thing that you hear on the radio and television these days is offers and compromise, where it's a contract that you execute with the government after going through all the filings and the negotiations to pay the amount or settle the amount for a lesser amount than the full tax debt.
Okay. And in some cases, of course, there could be bankruptcy.
That's true. Yeah, you can get certain taxes. Income taxes can be put away with bankruptcy. It's you'd have to get to a bankruptcy attorney to speak to that. But for income tax purposes, it's for tax returns that are more than 3 years old before the filing of the bankruptcy.
You have to have filed the tax return, by the way.
Yeah, the tax returns have to be filed 2 years before the filing of the bankruptcy, and the tax has to be assessed 240 days before the filing of bankruptcy. So there's 3 criteria to get that type of forgiveness in bankruptcy. Payroll taxes or trust funds, where the employer is collecting the funds that are the income taxes and the Social Security taxes on that the employees are turning over. If the employer has not done that, those are called trust fund taxes, and they are not forgiven in bankruptcy.
Right. So the payroll taxes are probably, especially the employee share, okay, the trust fund taxes, that's probably the most important tax bill that you have to be sure that it's paid on time.
Yes.
Yeah. Okay. Well, I don't have the money to pay my taxes. How do I go about getting an installment agreement?
You can negotiate, contact the number on the bill, or if you've had a contact with a revenue officer, meet with the revenue officer, and that's something that I've done over the years, and see what can be worked out. What will happen is the revenue officer will say, all right, this is what is showing as owing, where are we now? So he'll ask for a current financial picture, and there's a form 433 that, and there's A and B, and I think they go all the way to F on those things, where it presents the client's financial picture for the service to look at, and they'll evaluate, and then they'll propose a monthly payment schedule that will work to resolve that.
Okay. What is the statute of limitations for unpaid income taxes?
There's a 10-year collection statute, and that's something that is pretty much a drop-dead issue, because after 10 years, that ends the issue. I had a case where through the service not acting in time, the 10-year statute ran, and so then those taxes are uncollectible by the service, and everybody walks away. It's not a good situation for anybody, I think, in those circumstances, because you want to see taxpayers do the right thing, and even though they're attempting to do the right thing, and you want to see the service do the right thing, and it fails because one or the other has somehow let the 10-year collection statute slip. Again, that's the end of the matter, but it's sort of a Pyrrhic victory.
Yeah, okay. Let's talk for a little bit about offer and compromise. So is that a viable alternative?
It is. Offer and compromise is a very workable situation. I'm not sure that it provides the pennies on the dollars that you might see advertised on some of the programs that you might be looking at on television or hear on the radio, but you can get taxes reduced substantially based upon your ability to pay, and there's a formula that the IRS has with respect to that. You submit documents to them, and the formula really comes up to a situation of your net worth, your assets minus your liabilities is one amount, and then they take your monthly income, and it's like a new type of tax return where you're putting out what you're making monthly in earnings and subtracting from that various things that the service would allow for living. Mm-hmm. And that number is the net monthly income. They multiply that by a factor of 48. So for example, if you had a net worth of $10,000 and you have this factor that comes up to be $2,000 a month multiplied by 48, that gives you $96,000. So that, with your net worth $106,000, would be the smallest amount that the service will accept as an offer. Now that works fine if you owe them $500,000 because now you're talking about 20 cents on the dollar approximately. But if that amount exceeds what you owe, then the offer will fail, and now you're talking about resolving it in another fashion through installment programs, or sometimes you can look at things too when you're dealing with offers in compromise. There's two things. There's doubt as to collectability, and then there's doubt as to liability, and there are very significant differences for the fact that on doubt as to liability, there's no filing fees. You don't have to submit anything to the service other than an argument as to why the liability should not apply. A good example is we were talking earlier about the service coming up with what's called substitute for returns. Yes. And they'll come up with a tax amount, and that tax amount will be based upon some information they have in earnings that the taxpayer has received, but possibly against that earnings, he has numerous legitimate expenditures that will reduce that thing to a very small amount, or even create a loss. In that case, you would file an offer in compromise doubt as to liability and resolve the issue that way.
So actually, a lot of people aren't aware maybe, but I'll just mention that typically we have to file an amended return within 3 years after we file the original return. But in this particular case, if the person still owes the tax, we can basically raise something that we would usually put on an amended return after that statute is expired. It's sort of an exception to the rule.
That's right. That's correct. I mean, that is not an infrequent thing that occurs. And there's other ways that you can go about it. There's another thing. Once the IRS has started collection procedures, there's another filing you can do called collection due process. And that can be based on an incorrect determination of a tax liability and get the matter resolved that way. So there's more than one tool available to the taxpayers trying to get matters correctly in place.
Right. So you watch these commercials again, and they're saying, oh, you know, yeah, you're going to settle for pennies on the dollar. We may be able to settle for pennies on the dollar. Is this an easy process? Is this like a lay down when you're dealing with the IRS?
No, it's not. There's a lot of documentation that has to be submitted to the service. And if a client is getting assistance with an offer in compromise, it's not rocket science, because these forms that you fill out, there's a Form 433A typically for individual clients and a Form 433B for business clients. Mm-hmm. And when you fill out that form, it's just a question and answer that goes right down the line and asks you to list things in amounts. And based upon those amounts, the client can see, or if the client isn't doing it, him or herself, and the representative is doing it, you can review it, and if it's done correctly, there should be the answer right there. Hey, you either qualify for an offer and this is the amount, or you don't qualify for an offer because the computations exceed your tax liability. But I would hope that there's not practitioners out there that put things together to entice a client to go forward and then find out that it blows up later on when you meet with the offer and compromise specialist, and he tells you, well, this, and this, and everybody walks away saying, well, the IRS is a bad guy, but all that was happening is that they were filling out the form correctly, and that's how the numbers come about.
So this isn't a situation where, particularly, the doubt as to collectability, that usually you have to put some money up front. Isn't
That's
that
correct. When you file this doubt as to collectability, there's a filing fee of $150. That's one check you write. And then if your offer amount computes out to be, say, $20,000, you're required to put in 20% of that amount, or $4,000, with filing the offer that goes towards the payment of the ultimate liability. On doubt as to liability, that you don't have to do any of that. Doubt as to liability is strictly almost a legal or a factual argument.
Okay. But, okay, let's say they deny your offer and you put your 20% down. Do you get it back?
No, that's gone. But also, when an offer is denied, you can go to appeals. You can appeal that and have another go-round with an appellate officer. And so, again, this gets back to what we were talking to earlier. You might get a denial because the offers in this area are filed with the IRS office in Memphis, and sometimes the offer people working there are just going on a format of checks and going through things and get a denial, whereas if you appeal it, there may be some more explanations that supplement what's on the sheets and explains things, or helps to show the appeals officer things that were missed at the Memphis office in trying to get the matter resolved.
Okay. So about how many offers of compromise do you help with in a year, and what's your success rate?
Well, since my success rate was very good when I was doing them back in the early 2000s, they seems to have dwindled. But as I said earlier, the offers, if they're done correctly, you know the number going in, so they should work. In other words, you're going by the IRS formula. That's the amount. It's when offers fail, it's because people are trying to stretch the elasticity of those things, and they're finding out that they fail. But I've had excellent success, I would say, in not trying to pat myself on the back, but it's only because you just go by the format. But it doesn't mean the client's always going to like it. For example, there was a client that owed over $1 million, and the offer amount came out to be $200,000. Well, that's a significant savings, but the client's financial circumstances dictated that wasn't a good answer either. So while you may have had success on paper, it doesn't necessarily mean it's going to be a practical thing.
Okay. Well, Bill, we've got to wrap this thing up. So I want to thank you again for being my guest with me today and sharing some of your background and wisdom related to this area of IRS collections. So, folks, I think you may have gathered from what Bill has been sharing with us that this, in a sense, is kind of a specialized area. I mean, there's some things that you may be able to easily work out. You know, if you just owe a small amount, you need to set up an installment agreement. But if you're dealing with an offer and compromise, I would certainly say you're probably going to need some help. And especially, maybe it can be screened a little bit for going in to have a higher chance of success. So I hope you found this to be interesting and informative, and we'll see you next time on Financial Insider Weekly.